Hey guys, welcome back to another exciting episode. Raghav here, and guess what? Today, I have something truly special for you. I've got a massive surprise for you, a chance to win a whopping Rs 21,000. Yes, you heard that right. All you have to do is stick with me till the end of this video. Trust me, it's going to be worth your time. We're diving deep into the exciting world of IPOs, initial public offerings, and trust me, you don't want to miss this. Think of it like this. IPOs are like the grand opening of your favorite store. It's that moment when a private company decides to go public and offer shares to investors. Everyone's lined up, excited to get a piece of the action. The anticipation is palpable and the opportunities seem endless. But how do you know if it's worth the hype? How do you decide if this new stock is a golden opportunity or just another risky venture? That's what we're going to uncover today. We'll break down the key factors you need to consider before investing in an IPO. So, buckle up, because by the end of this, you'll not only have a shot at that Rs 21,000 prize, but also the knowledge to navigate the thrilling world of IPOs. We'll start by understanding what an IPO is and why companies decide to go public. It's not just about raising money, it's about growth, expansion, and reaching new heights. Companies often go public to gain access to capital markets, which can help them fund new projects, pay off debt, or even acquire other companies. But for investors like us, it's a chance to get in on the ground floor of a potentially lucrative opportunity. However, it's crucial to do your homework. Look at the company's financial health, its business model, and its growth prospects. Read the prospectus carefully and understand the risks involved. We'll also discuss how market conditions can affect IPO performance. Sometimes, even a strong company can struggle if the market sentiment is negative. And remember, not all IPOs are created equal. Some may offer great returns, while others might not live up to the expectations. By the end of this video, you'll have a clearer understanding of how to evaluate IPOs and make informed investment decisions. And of course, don't forget about that Rs 21,000 prize. Stay tuned and let's dive into the world of IPOs together. So, grab a cup of coffee, sit back, and let's get started on this exciting journey. The world of IPOs awaits, and so does your chance to win big. Ready? Let's go. All right, let's break it down. The stock market can seem like a complex and intimidating place, but at its core, it's a marketplace where shares of publicly held companies are bought and sold. IPO stands for Initial Public Offering. This is a significant event in the life of a company. It's basically when a private company decides to go public and sell shares of itself on the stock market. This process allows the company to raise funds from a wide range of investors. Imagine a talented chef who's been cooking amazing food from his home kitchen. He's built a reputation among friends and family, but now he wants to share his culinary skills with a larger audience. An IPO is like him opening a restaurant. Now everyone gets to taste his delicious creations. By opening a restaurant, he can serve more people, gain more recognition, and potentially make more money. But why do companies even bother going public? What drives them to take this significant step? Well, mainly to raise capital, money for expansion, research, or paying off debts. Going public provides a company with the financial resources it needs to grow and innovate. It's like getting a loan. But instead of going to a bank, they're asking everyday investors like you and me. This way, the company can access a large pool of funds without the need to repay a loan with interest. Additionally, going public can increase a company's visibility and prestige. When a company is listed on a stock exchange, it often gains more media attention and credibility. This can attract top talent, as employees may be more interested in working for a well-known, publicly traded company. It can also lead to better business opportunities and partnerships. However, going public also comes with its challenges. Companies must adhere to strict regulatory requirements and disclose financial information regularly. This transparency can be both a blessing and a curse. Public companies are under constant scrutiny from investors, analysts, and the media. They must consistently perform well to maintain their stock price and investor confidence. So, while an IPO can provide significant benefits, it's not a decision to be taken lightly. Companies must weigh the pros and cons carefully before deciding to go public. In the end, an IPO is a major milestone for any company, marking the beginning of a new chapter filled with opportunities and challenges. And for investors, it offers a chance to be part of a company's growth story from the very start. Now let's talk about the big leagues, the Nifty 50. These are the heavyweights of the Indian stock market. The Nifty 50 is a collection of 50 of the most prominent and financially sound companies listed on the National Stock Exchange of India. These companies are the backbone of the Indian economy, driving growth and innovation across various sectors. Remember the time when companies like Reliance or Infosys went public? These IPOs were not just financial events. They were milestones that marked the beginning of new eras for these companies and the market itself. The excitement and anticipation surrounding these IPOs were palpable. Yeah, those were IPOs that made history. The buzz in the market was electric, and everyone wanted a piece of the action. These IPOs were celebrated not just by investors, but by the entire nation, symbolizing economic progress and opportunity. Take Reliance, for example. Their IPO back in 1977 was a game changer. It was one of the most significant events in the Indian stock market's history. The company, founded by Dhirubhai Ambani, captured the imagination of the public and investors alike. People lined up for days to get their hands on those shares. The enthusiasm was unprecedented, with investors from all walks of life eager to invest in what they believed was a golden opportunity. The queues were long, and the excitement was infectious. And guess what? Those who invested early saw their money multiply manifold. The returns were phenomenal, and early investors reaped substantial rewards. It was a testament to the potential of investing in the right IPO at the right time. But remember, not every IPO is a guaranteed success story. Some companies soar, while others, not so much. The stock market is unpredictable, and not all IPOs live up to the hype. There have been instances where companies fail to deliver on their promises, leading to significant losses for investors. That's why understanding the process and doing your research is crucial. Before investing in an IPO, it's essential to analyze the company's fundamentals, market potential, and financial health. Consulting with financial advisors and staying informed about market trends can help make more informed decisions. Investing in IPOs can be rewarding, but it requires diligence and a strategic approach. All right, enough talk. Let's get our hands dirty with some real-time data. And what better platform than TradingView? It's like Google Maps for the stock market. We can pull up charts, compare companies, and analyze historical data. Want to see how a particular Nifty 50 stock performed during its IPO? TradingView's got you covered. Remember, knowledge is power. The more information you have, the better equipped you are to make informed decisions. Section 5. Technical Tools. Charting the IPO journey. Now, let's put on our analyst hats and talk about technical analysis. This is all about studying price charts and patterns to predict future movements. Think of it like reading footprints in the sand. By analyzing the past, we can get clues about where the market might be heading. Don't worry, you don't need to be a math whiz for this. TradingView has tons of tools and indicators that do the heavy lifting for you. Section 6. Fundamental Factors. Beyond the charts. But hey, it's not just about charts and graphs. Fundamental analysis is equally important. This is where we dig into the company's financials, their revenue, profits, debt, management team, and the overall industry they operate in. It's like checking out a restaurant's menu, reviews, and hygiene rating before deciding to eat there. You want to make sure the company is fundamentally sound before investing your hard-earned money. Remember, a company's financial health plays a huge role in its long-term success and ultimately your investment returns. Section 7. Real-world examples. Learning from successes and mistakes. Now, let's bring it all together with some real-world examples. Remember the Zomato IPO? It created quite a buzz, but the stock price hasn't exactly been a smooth ride since then. On the other hand, look at companies like Avenue Supermarts, D-Mart. Their IPO was a massive hit, and the stock has been on an upward trajectory. By studying these examples, we can learn valuable lessons about what works and what doesn't in the world of IPOs. Section 8. Claim your reward. A simple step to Rs 21,000. Congratulations, you made it to the end. Now, for the moment you've all been waiting for, that Rs 21,000 reward. Here's how to claim it. 1. Subscribe to this channel and hit that notification bell. 2. Take a screenshot of this video right now. 3. Send that screenshot to me on WhatsApp at WhatsApp number. That's it. I'll randomly select one lucky winner from all the entries. Section 9. Join the journey. Subscribe for more. And hey, this is just the beginning. I'll be sharing tons of exciting content about the stock market, investing, and much more. So make sure you're subscribed and never miss an update. Until next time, keep learning, keep growing, and keep dancing your way to financial freedom.